G. Manage merchant services programs, including fees, risk, controls, card security compliance, retention requirements. Merchant services programs are an important component of treasury operations because organizations increasingly rely on electronic payment systems and payment cards to process customer transactions efficiently. Treasury professionals manage relationships with merchant service providers, payment processors, acquiring banks, and card networks to ensure secure and cost-effective payment acceptance. Merchant services include credit card processing, debit card acceptance, point-of-sale systems, online payment platforms, mobile payments, and electronic commerce support. Effective management of merchant services improves customer convenience, accelerates collections, and supports cash flow efficiency. Treasury teams evaluate transaction volumes, settlement timing, processing reliability, and service quality when overseeing merchant programs. Strong merchant services management also reduces operational disruptions and supports secure payment processing across multiple sales channels and geographic markets. Merchant service fees represent a significant operational expense for many organizations and require careful analysis and monitoring by treasury professionals. Common fees include interchange fees, assessment fees, transaction processing charges, chargeback fees, equipment costs, and monthly service charges. Treasury teams analyze pricing structures, transaction categories, processing volumes, and settlement terms to determine whether merchant service arrangements remain competitive and cost-efficient. Organizations often negotiate with payment processors and acquiring banks to reduce fees or improve contractual terms. Treasury professionals may also benchmark merchant service costs against industry standards to identify opportunities for savings. Effective fee management improves profitability and ensures organizations receive appropriate value from payment service providers while maintaining reliable customer payment capabilities. Risk management is a critical aspect of merchant services administration because payment card processing exposes organizations to fraud, chargebacks, data breaches, and operational disruptions. Treasury professionals establish controls to monitor transaction activity, detect suspicious payment patterns, and reduce unauthorized or fraudulent transactions. Chargebacks, which occur when customers dispute transactions, can create financial losses and reputational concerns if not managed effectively. Treasury teams implement fraud detection systems, transaction monitoring tools, authorization controls, and dispute resolution procedures to reduce operational risk. Treasury professionals also evaluate service provider reliability, cybersecurity capabilities, and business continuity arrangements when selecting merchant service partners. Effective risk management strengthens payment security, reduces financial exposure, and supports stable customer payment processing operations. Card security compliance is essential because organizations handling payment card information must protect sensitive customer data and comply with industry security standards. Treasury professionals work closely with information technology, compliance, legal, and operations teams to maintain compliance with payment card industry data security standards, PCI DSS, and related security requirements. Compliance efforts include securing payment systems, encrypting cardholder information, restricting system access, monitoring network activity, and conducting regular security assessments. Treasury teams also coordinate employee training programs to improve awareness of payment security risks and fraud prevention practices. Failure to comply with card security standards may result in financial penalties, legal liabilities, reputational damage, or restrictions on payment processing capabilities. Strong compliance programs improve customer trust and operational security. Retention requirements and record management are also important components of merchant services administration because organizations must maintain transaction records, settlement reports, and supporting documentation for operational, regulatory, and dispute resolution purposes. Treasury professionals establish procedures for retaining payment records, chargeback documentation, authorization logs, and merchant agreements according to regulatory standards and organizational policies. Proper record retention supports financial reporting accuracy, audit readiness, and effective dispute management. Treasury teams also ensure secure storage and controlled access to sensitive payment information to reduce data security risks. Automated document management systems and treasury technologies improve reporting efficiency and facilitate retrieval of transaction records when responding to audits, investigations, or customer disputes involving payment activities. From a CTP examination perspective, candidates must understand the operational, financial, and risk management considerations associated with merchant services programs. Exam questions frequently assess the ability to analyze merchant service fees, evaluate payment processing risks, identify internal control weaknesses, and recommend card security compliance practices. Candidates should understand payment card processing structures, chargeback management, PCI DSS requirements, fraud prevention techniques, transaction monitoring systems, and record retention standards. Knowledge of merchant service provider evaluation, cybersecurity risks, settlement procedures, and operational controls is also essential. Treasury professionals must recognize how effective merchant services management supports secure payment processing, operational efficiency, customer confidence, and organizational financial performance. Mastery of these concepts enables treasury professionals to manage electronic payment programs effectively and reduce associated financial and operational risks.